Thank you everyone for dialing in. Today we have our special guest, Derick Tan, to talk about US market outlook and strategies to trade on the New York Stock Exchange and NASDAQ. As we all know, current US market, global markets is quite very volatile. One day up, one day down. So how can you profit and how can you take advantage and manage your portfolio well? We have here Derick Tan from Timing and You, our special guest for tonight, that he will be sharing with you on the strategies and the market outlook.
All right, so good evening, ladies and gentlemen, and welcome to our US Market Outlook webinar. All right, whereby I'll share you guys where I see the US market is going to be like. All right, and some of the probably share with you some trading ideas that probably you guys can look at. All right, going forward. All right, so next slide. I'd like to share you guys what the Federal Reserve Chairman Jerome Powell mentioned on the 2nd of November, early this month. Of course, tomorrow you'll be giving a talk again, but this is what he shared on the 2nd of November. In terms of for the rate hiking, how fast to go. The second is how high to raise our policy rate. And the third one will be how long to remain at the restrictive level. And he says, to be clear, let me say again, the question of when to moderate the pace of increase is now much less important than the question of how high to raise the rate and how long to keep the monetary policy restricted. So, ladies and gentlemen, out of the three things, he said two of them is more important than one of them. What are the two more important is how high he is going to increase the rate to, the terminal rate, and how long he is going to maintain the rate at. These two is more important, can you see, than the pace of the increase of the rate. No one knows when there's going to be a recession. Also, ladies and gentlemen, this was before the so-called midterm election on the 8th of November. He said no one will know whether there's going to be a recession. Of course not. Before election, I don't think he dared to say there's going to be a recession. All right. So next, ladies and gentlemen, but there are a lot of indicators showing that recession is coming. Next. All right. To me, one of the most accurate indicator is actually this 10-year minus 3-month US Treasury. The so-called the yield of the 10-year Treasury is normally higher than 3-month yield. But once it turn negative, that means inverted. This is actually the zero line. The black horizontal line is a zero line. Once this blue line is actually the 10-year minus 3-month. So can you see as of last night, the 10-year minus 3-month is actually negative 0.72. You see all these gray column, these are actually periods of recession. Also, if you look over here, this is actually year 2008 global financial crisis after 10-year minus 3-month inverted. I don't know why Powell on the 2nd of November say he say no one know whether the recession is coming, but there are more and more signs that recession is coming. Then you guys will say the so-called the S&P continue to drop. Then how can I make money? All right. So the way how we can make money is by doing this thing called short selling. And the way to do short selling, there are ETF called inverse ETF. Also, what's the inverse ETF? An inverse ETF is an ETF constructed by using various derivatives to profit from a decline in the value of an underlying benchmark. Inverse ETF allow investors to make money when the market or the underlying index declines, but without having to sell anything short. So that means when you buy into all these inverse ETF, it's actually doing short selling for you. Jackson daily S&P 500 bear one time. Can you see it's a bear? That means what? That means it's short selling. One time, that means there's no leverage use. So if we expect the S&P 500 to drop to make money, what we can do is we can buy into this SPDN. For those who are more adventurous, all right, there's actually this SPXS. All right, can you see this 3-time bear 3-time? Can you see? That means there's 3-time leverage built into it. That means what? That means if S&P 500 were to drop, if you go in and buy this SPXS, if S&P were to drop 1%, SPXS will actually go up 3% because there's a 3-time leverage built into it.